How to trade 3-week tight loss watch list on VCP Trader. So VCP Trader recently introduced 3-week tight close. So this is a pattern that was that's referred to by William O'Neill, the author of the famous book How to Make Money in Stocks. So essentially, what this pattern consists of is you have an up move of at least 30% prior to formation of this, and then you have 3 weeks in which the close is within 1.5% of the previous week's close. So let's take an example of BHEL. So BHEL gave a very good move. This is a move in BHEL, right? And it was about 118%. Then it gave a pullback, then went up again. It gave a 35% move, right? So now we are waiting for a pullback to near the 10 MA on weekly, that is the 50 MA on daily. So here you can see that there is a WTC pattern, right? And it actually became a 4-week tight closing, which is an even more bullish pattern. And next week there was a bullish engulfing, and pull sash, and then the stock rallied from there, as you all know, to 136 now, right? So it's a 63% return on a large cap stock in roughly 2 months. Okay. Now taking another example, Sirma, which is a really new example. So this stock rallied around 82%, and then it started making a sideways move, and closer to 10 moving average on the weekly, we got this WTC 3-week tight closing, and then we already have an up move of around 18%, right? And another example is Talbot. Again, you can see that the stock has had a very good up move, and then it goes into so this is around 123%. Then it goes sideways, and here you can see that this is a 3-week tight closing pattern, and the very next week it just shot up around 37% up now. So now let's talk about the entry and stop loss. So theoretically, the 3-week tight closing is triggered when it closes the highest high of the 3 candles. So that's in this case 903, right? And the stop loss would be 5% from there. Keep 5% as stop loss. So, however, we can, using the principles of strong start, if after this formation in the first day we get a strong start, then we can buy it without waiting to cross. So because from here the close is 863 and it's a 5% move already when it crosses 9. So why wasted? We can buy in anticipation if we have a strong start. So you basically save that 5% is your stop loss actually. So you can buy right at the open within 5 minutes, and then provided there is a strong start, and then wait for the targets to come, right? So the profit targets could be roughly anywhere between 18 to 40%. That's what generally this pattern gives target.